just before the wrap-up, let's look at the implied probability here for countdown to the Fed. And because I talked about the Fed, yeah, more or less like in the previous days, around 2/3 against a rate hike, the probability. Okay. This is a live market open wrap-up for today, January 26th. It's a Tuesday. The mood has dampened in markets. Weaker oil was the leader, then weaker stocks, especially in China with the Shanghai Composite crashing over 6%. That means weaker everything, commodity currencies, pound, everything basically except the euro and the yen. Events yesterday didn't really move markets. IFO was negative but didn't move. Draghi didn't say anything new. But there's lots of speculation about the Fed and the Bank of Japan coming tomorrow and on Friday, respectively. Euro-dollar moving up in range. Safe haven flows. 107.80 establishes itself as even stronger support, double bottom. Resistance 109. Pound dollar falling below 142. Support 141.25 and 140.80. Resistance 142.40 and 143.50. Dollar yen. Safe haven flows pushing the pair lower, the yen higher, 117.91 current level, 117.30 and 116 support, 118.30 and 119 resistance. Dollar CAD falling, Canadian dollar falling with oil prices. It was seen more yesterday than today. 143 already 2 cents above the lows that this pair experienced last week after the Bank of Canada did not cut. Further resistance 144.40. 142.25 works as support. Aussie dollar pressure to the downside alongside Chinese stocks. 69.44 current level. 69 is some kind of support. 68.30 really strong support. 70 and 70.65 to the upside. New Zealand dollar looking a bit stronger in comparison to the Aussie, but also pressure to the downside. 64.46 is the current level. 64.25 is support. 64, 63.50. We have a rate decision in New Zealand tomorrow. In terms of things to watch out for today, we have Mark Carney speaking, Governor of the Bank of England, at 10:45. Let's see if he hits the pound, pounds the pound once again. Okay, he did that last week in a spectacular manner, saying that it's not the time to raise rates. Then we have a few US figures. The most important one is CD consumer confidence. Are consumers more confident because of falling gasoline prices, or are they worried about, well, everything? And before that, we have house prices and the market services PMI, not the ISM one, which is more important. And for those of you trading the Aussie, in the middle of the night, we have Australian CPI released only once per quarter, critical for the RBA decision, critical for the Australian dollar, expected to rise, but we've seen in New Zealand that prices are pressured to the downside. So this could be also Australia's fate in terms of prices. Not necessarily bad for consumers, of course. And of course, the tension is mounting towards tomorrow's Fed decision. We don't know if the Fed will join the doves, hit the dollar, give us some soothing words that it's not going to hike in March or hint about that, or if it's gonna be hawkish once again, keeping up the optimism about the US economy. I don't think it's going to be one extreme or the other. It's going to be a mixed, blurred message, a fine or not so fine balancing act. Okay.